Hello and welcome, What the Finances, to another episode of the What the Finance podcast, where we talk to experts to help gain a greater understanding about what is happening in the world of finance, investing, and markets. So, on today's podcast, I'm happy to welcome Steve Ward, who's a high performance coach who's passionate about enhancing performance for people operating in high stakes, high pressure environments. And he specifically works with traders, fund managers, markets, and banking professionals across asset classes and experience levels. So, Steve, thanks for joining the podcast today.
You're welcome. Thanks, Anthony.
No problem. So I'm not sure if you listened to or had a chance to listen to the High Performance podcast, which is based in the UK, and I guess it focuses on high performance. But their first question a lot of the time is actually asking the guest what they believe high performance is. So I'm not sure, I'm going to page out of their book and I'm going to ask you, what do you believe high performance is?
Yeah, good question. I think, and it's a great podcast for those who don't listen to it. And it's a good question. And it's one that I ask all my clients, that's for sure. So I should have a definition myself. So for me, there is a contextual factor to it. But if we look at markets broadly, then if we talk about high performance, I would say then we have to look at some sort of benchmark, whatever that might be. Could be internal, could be external. But let's say we take a market benchmark, and I would say a high performer has to be achieving above that benchmark on a consistent basis. And then I think the nuances for me become, I would also put into that something around sustainability. So therefore that they are able to replicate the efforts they're putting in on an ongoing basis, i.e. it's not work hard, grind yourself, over a short period to get good returns, but we're achieving good returns over time. And within that, in a healthy and helpful way. So I think that's probably the core ingredients for me.
And do you feel like that's the hardest thing? I guess you've probably seen lots of high performers, but the challenge is it's that consistency over, decades, basically, especially with, I guess, trading and investing.
Yeah, well, you've got the mental stamina, i.e. keeping the commitment levels up, doing what needs to be done on a daily basis. The fuel of mental commitment can be things like goals and values, but underpinning all that, you've got to have obviously physical reserves of energy to keep, literally doing the behavior. So, and that's difficult. And generally, a lot of my clients are working in environments that are quite, not quite, they are demanding. The individuals are demanding of themselves. The organizations are demanding of the individuals. The expectations are high. And, generally people, they enjoy what they're doing and they want to be doing it for a long period of time. Historically, I think in markets, there was opportunities for people to make money in a concentrated period of time, retire quite early. I think a lot of people now, the game is longer. And so people are having to think a bit more about, health, well-being, sustainability, and certainly firms and organizations are doing that too.
Yeah, it's definitely a shift to that. So, before you started helping, I guess, finance professionals, you were in sports psychology, coaching elite athletes. So I'm not sure, are there any similarities between the two? Are there lots of differences? What's your experience in that regard?
Both. So there are some similarities. And I think, I've worked with poker players, athletes, senior leadership teams, CEOs, as well as traders, PMs, analysts, so a pretty broad group of people. So I think in elite performers, there are probably some general characteristics. One might be, let's call it a mastery focus, a learning focus, a desire. I think it's two things. It's a passion for what you do and wanting to get better at that. So sort of mastery of the craft. And beyond that is also a commitment to. So it's not just I enjoy what I'm doing, I'm passionate about it, but I'm also actively engaged in, taking steps to improve what I do and become, a better version of myself in whatever that context might be. So I say that's definitely a common theme. I would say probably in most high performance domains, there's ups and downs. And they can be in the markets, they can be considerably high and low, both in terms of results and in terms of the experience you have whilst you're receiving those results. So there's an element of let's call it kind of resiliency, for want of a better term, but the ability to navigate that experience successfully, which is difficult. Again, there's that mental stamina piece I talked about earlier, just keeping going, doing on a daily basis. Consistency, really, it is the key, but it's not easy. There's probably a piece in there again about self awareness. I think the best performers I work with probably are very self-aware. They know what their strengths are, and they're also thinking about how to leverage those, and they are also aware of what their downfalls and limitations might be, and then they've got the option to either work on them or work around them or plug into a team where other people might have, opposing strengths and weaknesses. So I think that's definitely a key factor. Probably again across all is an awareness of the role that psychology plays in what they do, and it'll be different quantities for different people in different contexts, but for all of us there's a psychological component to what we do, and then there's knowing that but also being willing to do the work on that. So I think that's probably a key theme. Competition, I think probably across many of them is also, I think there's at some level they're quite competitive, some obviously highly competitive, some less so, some competitive with self, others competitive against others, in our case in the markets. And probably I think just that sustainability piece, I think, at the very highest levels, I think people do have an awareness that they want to be not just a one-hit wonder, make great returns for 1 year, win the world championship once. I think that at the higher levels, people want to be able to get to that level and to stay there. So probably that involves creativity, adaptability, flexibility, as an additional skill set, because the context that everyone's performing under isn't going to be the same from year to year. You're going to have, in our case, markets, new market participants, different market dynamics, different drivers of the market. So, traders and PMs need that flexibility if you're going to be in it over time. Then you need to be able to create, to innovate, and deal with the setbacks. Not all innovations will work out. So yeah, I think there's a lot of commonalities, but how they're actioned will be very different based on whether you're athlete, whether you're trader, whether you're CEO, entrepreneur, poker player, and so on.
Yeah, and I guess that's a bit of a loaded question as well, because not only are they different sectors, but every person is individual in their own way, and I'm sure reacts to different things and have different challenges. So I guess that's another factor that you have to focus on.
Always. That's the core, and it's what I try and help everyone I'm working with understand, is that whilst there might be some common principles, and this is how I kind of work, is let's look at what the common principles are that maybe apply to most people, but how those principles are deployed is going to be very individual. I mean, if you look at it, just in trading, how many different markets people could be trading, each with different dynamics. Then you'd have people with all the different strategies that you could deploy within those markets. Some people are going to be trading from home. Some are going to be in a bank. Some are going to be in a hedge fund. Some are going to be in a commodities trading house. Some are in a prop trading firm. Each of those got different contexts. So it's kind of who you are, what you're trading, how you're trading it, where you're trading it. And when you put all that together, on top of the fact that every individual is an individual, then we always have to be looking for, what does it mean for me in my world, and how do we apply it in context for that person? Which means, much as it would be nice, there isn't any sort of real magic formulas. There's a lot of experimentation, testing, trying things out, finding what works, getting some hunches. We can learn from others to kind of take some shortcuts, but a lot of it is just doing the work yourself and kind of just narrowing it down over time through experience.
Yeah, I guess that's a challenge, is that having that patience to do that. So let's say if you were to get a new client without, I guess, giving away all your secrets and and all that. So what would, you mentioned a few things there, but what would be the steps you would take to then hopefully get to the point where they can, you can give them an action plan, I guess, for them to follow?
Yeah, so my clients they're coming for different reasons and in different settings. So some obviously coming for one-to-one coaching, some are part of training groups and or projects and consultancy. But if we assume it's an individual trader coming for coaching, my basic process is, first step is I need to meet that person. They need to meet me. We find out about each other to make sure, because it's a relationship. So there's a little bit of speed dating going on, I guess, in terms of, am I right for you? Are you right for me? So that's phase one. Let's assume we both agree, yes, we think we can work together. The next stage for me is to find out as much about that person as I possibly can. And that means a bit about their biography. So, and this would include probably schooling into high school, into university/college, first job, trading history, trading career. So really kind of get a biography of that person. Then digging deeper, particularly around markets, how they view the markets, the experiences in the markets, things like their first boss is quite an interesting one, challenges they've had and overcome, highs and lows. And what I'm really trying to do, Anthony, in that initial meeting is to try and get a sense of how they see the world, how they see themselves, how they see the markets, so that I can put myself into their head in a way. So as we're navigating whatever it is we're going to work on together, I can try and see it through their eyes as we start to think about selection of tools, techniques, or practices. Once we've got the that understanding piece done, Next stage really is goal setting. So what does the person want to achieve in the coaching? We define the outcome, and then we can start to map, here's where you are, here's where we're trying to get to. And then together we evolve a plan, and then we work on that plan over the subsequent number of sessions that the person has agreed to. So
I'm sure sometimes you find it where maybe the person has a different idea of themselves than maybe what you've experienced. I guess, how
yeah.
do you deal with that?
Yeah, so what we generally do, particularly when it's all of my coaching is with institutions, so this would be different if it's a retail client, but I would meet the person, the trader themselves. I'll probably meet at least 2 or 3 of the people that either work with them. Normally their head of desk, maybe a colleague, might be somebody from learning and development or from HR as well. So I'm trying to get multiple perspectives of that person. We'll also do some psychometric testing. And then for many clients, we'll also get their trading data. So we've kind of got the trader's subjective experience of themselves, who they think they are and how they do what they do. Their boss's perspective of who they are and how they do what they do. A colleague's perspective, probably someone further removed from in learning and development. And then whatever the psychometric says, and obviously I'm trying to build my picture. Then we put all that together, look for what aligned, look for where there might be some discrepancies, which obviously is always interesting. And then we kind of go forward from there. So, and some people obviously, their perception of themselves is very accurate compared to other people's, and others is maybe not so much so.
Yeah, exactly. I'm sure that's challenging to do. So in terms of, let's say, you've done that process, you've got the action plan slash the the tools that you're going to use to help these traders. What are the consistent challenges I guess you see these people experience once they're trying to, I guess, improve their high performance, or maybe even just before, they've gone on this journey?
Yeah, I mean, people are coming to coaching for different reasons. That's for sure. So some of my clients are already very high performers, and it might be they're looking to either scale up even further to go from kind of being very good into kind of the really top tier. Some will be already in that very top tier, and they're maybe thinking about sustainability. And that could be sustainability from an energy perspective, or from a motivational perspective, or could be from a creative and adaptive. So markets are changing. I want to keep doing well, but how do I sustain that over time? So that's probably, let's give it 25% of clients, maybe 30%. Then the majority are coming probably because initially they feel there's something that either isn't working out for them. Maybe they're in a period of drawdown, they've had a big loss, there's some challenge they're trying to overcome. Or they just get a sense that maybe, that for whatever reason, they're not performing in a way they as they would like to be. And maybe there are individual behaviors that are accounting for that. For some, it might be they're not sizing up enough on their winners. For other people, it might be the fact they're not dealing well with their losses. Other people, it might be they're too quick into the market, so they haven't got the patience to wait for things to set up. For other people, could be the opposite. Kind of never getting in, not pulling the trigger, and so on. So I think anyone who's traded will be able to relate to a lot of these behaviors. So again, the behaviors might be relatively common that we might see in people. But the reasons behind why an individual is doing those behaviors can be very different. And of course, it's not just the individual, it's also the culture they are operating within, the environment is also going to be influencing that. So, and there's also, what can we control in our work together, and what do we not have control over? So it's very nuanced. I mean, I've been doing it for 17 and a half years now, and I'm just beginning, I think, to kind of get the hang of it. So it's there's always more, when we start thinking about, what's going on in the brain at the neurological level, what's going on psychologically, what's going on physiologically, what's going on environmentally, what's happening in the markets. And we're trying to sort of put all that together and then go, right, this is what we think is happening. This is our kind of hypothesis. Let's test it and see. And then really it's, there's a lot of experimentation that goes on together.
Yeah,
and on the flip side, some people have got challenges that might be to do with the team they're working in, might be to do with the organization, might be things, stresses and pressures outside of the market. So, it's really no two clients are the same, really, I guess is what I'm saying, even though the behaviors might look similar.
Yeah, and I guess you're goal is to try and understand those emotions and almost like not take it out, but try and see if you can resolve it or the ways to sort of manage that. Because I guess sometimes, especially if you're performing poorly, it seems like it's a self-fulfilling prophecy. Sometimes everything else starts to go wrong. So I guess it's trying to explain that and make it a bit more easy to understand.
Well, my role really is, what I want for all of my clients is, I want them to be able to become the best version of themselves, both as a trader and as a person. That's really important to me. I want them to develop a skill set or the capability to be able to deal with whatever situation it is that they've come to coaching for. But I also want to broadly provide like an educational experience where they can take some of those tools that they learn in coaching, but deploy them outside of trading, inside trading, but in different situations and contexts. So we're not just trying to solve that problem. We're trying to look at, maybe how we can use it more broadly as well. And it is about managing. I'm not one for trying to get rid of stuff. I think I learned many years ago that trying to get rid of thoughts or trying to get rid of emotions or trying to get rid of urges and so on, sensations, probably impossible. But how we respond to them, that's a trainable skill set. And that's what I'm doing for my clients is, whatever it is that's happening, and for whatever reasons it is, let's be curious about that. And let's see if we can develop a way for you to effectively manage that such that whatever shows up, but we reduce the impact on your trading behavior and therefore long-term, trading returns.
Interesting. So I guess have you noticed if you try to remove something, it might work for a short term, but then it'll just get to the point where maybe it's like a blowout or something.
Yeah, well, it's not something. Yeah, so let's work with that because it's a nice metaphor for that. Let's imagine there's an emotion. Let's keep it very simple so people can relate. Let's just call it fear, because there's a lot of talk about fear of loss, fear of missing out, fear of leaving money on the table, and so on, fear of making mistakes. And so a lot of people have an aversion to fear, and they don't want to feel it. So they're trying to get rid of it before they even have it. And when they do have it, because they don't want it, they have like a reaction to it. Now, the metaphor I use with my clients is, if we think about emotions like a beach ball, and this is where your blowout phrase kind of really works. If you have that beach ball, and this is the beach ball of fear, if I don't want to experience fear, what I can do is I can suppress it, so I can push it under the water. But while I'm doing that, it's effortful. So it takes effort to do that. The ball hasn't gone away. And while I'm holding that ball down, and it's still on my mind that I'm holding it down, it's reducing my bandwidth to pay attention to things around and within. And then at some point, of course, if I let go of the ball, to use your phrase, we have the blowout. And that's often where a suppressed emotion becomes an impulse. Revenge trading could be a great example where we're trying to suppress something, we get an emotional buildup, we try not to feel it, but eventually it comes out. So in my line of work, again, as a metaphor, working with that metaphor, and again, this is a reflection of my psychological approach. I'm not saying this is true for all people, but in the way that I work with clients, we go, well, the alternative is, let's see the beach ball, and let's call it the fear of missing out beach ball. Let's recognize we've got the fear of missing out beach ball here. Let's acknowledge that, and maybe acknowledge that what is the situation I'm in where maybe I'm feeling the fear of missing out. Let's notice that I'm feeling it, and maybe the thoughts that come with that. And as soon as we start to acknowledge, what happens, interestingly, psychologically and neurologically, is we get some distance and some reduction in intensity. So now we're not kind of in the hold of it. We've got, and essentially, a gust of wind, a change of tide, and the fear beach ball could shift. But if I'm holding it down, the wind can change, the tide can change, but the ball's still there. So we don't allow for the transient nature of emotions if we try to suppress. So, but if we can acknowledge it, and it might be, we take a breath or two, take a pause, a step back, reflect, and then we can choose what to do. And the goal in my line of work is, we want the client to be able to take the effective trading behavior, but they might have to do it in the presence of the fear being there. So we're not trying to get rid of the fear so you can do what you need to do. We're saying we need to train you so you can do what you need to do, but you might have to accept that is in the presence of fear or anxiety or a doubt or a worry or excitement or enthusiasm. So we try not to, or the phrase that sums it up, which I can't remember who said this first to give the credit to, but is, the goal is to be able to have your emotions without your emotions having you. And that's where I've kind of come to in over, I guess, my 20-year career, is to try and enable people to kind of acknowledge, if you're trading the markets, there's highs, there's lows, emotions come with the highs and the lows. And amongst all of that, you're going to have those experiences, and you just need to be able to learn how to manage it, navigate it. But the goal, because emotions don't make people lose all money, pulling the trigger, it's an action, makes or loses money. So the goal is to be able to do the action even with the emotion maybe being present, and we would call that poise. Yeah, and that's a phrase that I love with my clients. Let's try and be poised, not poised, icy cool, calm. That's a misconception in high performance. But let's acknowledge what's showing up as part of the experience, perfectly normal, potentially performance enhancing, sharpening our senses and our focus. But let's focus in on what do we need to do effectively to respond in that moment.
Okay, so that's almost putting a plan together. So if you feel this emotion, or if you understand what's happening, then you have a plan so you can actually mitigate it potentially.
Yes, well, you could. So what you can do, obviously, through training is, once you start to allow yourself to be open to uncomfortable emotions, you get better at handling them. So if you have an aversion to fear, then what happens is every time you get it, you try and get rid of it. But now you never learn how to manage it because you're always getting rid of it. So you don't get any exposure effect. Once you start to be open to discomfort, it's like, if you go out running or do any exercise is uncomfortable. And the way you get fitter or faster is you have exposure to the stress. The body then adapts to that stress response and becomes stronger over time through the exposure effect. Same for us, emotionally and psychologically. If we're trying to avoid it all the time, we never build the exposure to it, and we never learn the coping skills. So once we shift our mindset to being open to the discomforts of trading as normal, then we might be more willing to be in them. Then we can learn how to cope with them through skills and practice and so on, and experience, and we get the exposure effect. As we get more skilled at dealing with them, of course, we now build our efficacy in the fact that we know how to deal with it. Now we worry about it less, and so it has less impact. But unless we start getting into it and dealing with it initially, we're always going to have this aversive effect, regret aversion, loss aversion. There's so many aversions in trading. The opposite is really kind of acceptance or acknowledging or approaching, even, kind of leaning into. So, but what you could also do, and so what I do with my clients, is we could do mental rehearsal and visualization exercises, where if we know specifically what the situations are and we have clarity on the exact behaviors, we could imagine being in those uncomfortable situations, imagine experiencing whatever shows up, and at the same time, imagine ourselves then coping with it. So whatever techniques we might deploy, and end up with us then seeing ourselves taking effective action. And we could do multiple rehearsals over time. And again, each time we rehearse it, neurologically, we're building a bit of a pathway so we can do it in reality. And we're getting a little dose, like an inoculation of the response, the discomfort. So we start to build a tolerance for that. So yes, there's a lot going on, but there are things that people can actively do to train that.
Yeah, because it's really interesting, because when I think about trading, I guess a lot of people think like, what you're doing in the business, like when you're actually doing the trading. But from what you're telling me, there's so much actually happening outside that you have to focus on, these tactics and habits of actually trying to improve yourself to the point where you can probably get the results that you want.
Well, you can certainly enhance them. So this is what the phrase I would use. Yeah. So we can enhance. So if you think about broadly, if you think about trading, I often use the 4 S's. So you need, there's skills that you need. Then there's your strategy, how you deploy those. So let's call it skills and knowledge, keep it broader. So skills and knowledge, phase 1. Strategy, how do I deploy that skill and knowledge within the markets I want to? So what's my approach going to be? 3rd S, self. Psychology, so mental, emotional, and physiology. So mind and body, let's kind of keep it simple in there. And then situational factors could be, market conditions, team that I'm trading in, organization I'm trading in, my boss. So things outside of my control that are external. And I think a lot of people focus on the skills and knowledge piece, and then probably drop down into getting obsessed about strategy. So kind of, how do I approach the market and so on. Don't maybe give as much thought or do as much training as they could do in the self piece. And obviously the situational factors, there's not always as much controllability, but even, how you set your screens up is a situational factor. What's on your screen? How big is what's on your screen? How does your desk look? That's a situational factor. So there's some controllability about maybe immediate environment, which can, again, have an impact. So, I mean, I often ask people when I'm doing workshops, what percentage of your trading performance would you attribute to psychology or mindset, whatever you want to frame it as? The typical range is between 20 and 90 something percent. Now, if we take the lower end of that and say it's 20%, 1/5 of what you do is down to your psychology. My second question is, how much time do you spend either per week or per month actively training or developing your mind or your mindset or your psychology? And that number is often exceptionally low if we do it in terms of minutes or even hours. So there's this disconnection between, even at the low end, it's 20%, which is still, I would say, hugely significant for most people. But if we go to the far end and say it's 50, 60, 70, 80%, and we're spending hardly any time training it or developing it, then that for me is pretty interesting. And I think when you ask that question to people, it is a bit of a, oh, right, yeah, that's also interesting for me. If I'm saying it's 50% and I'm spending no time training it, then I'm underperforming, is probably the reality. And sometimes that's because people haven't really thought about it that way, or they don't know what to do to train it. So it might just be they don't really know, they might be aware of that gap, but it's like, well, how do I train it? What do I do? And obviously that's what people often come to coaching for, is they recognize some sort of opportunity at the psychology or the mindset or the physiology level. And obviously I then try and provide that guidance as to, here's what we could do together that might be useful.
Yeah, definitely. So I know, one thing that you mentioned a lot is health, I guess, and making sure that you're doing whatever you can to have good health. So yeah, I guess I'm not sure if you can talk about more about that. And I know myself, I drink probably too much coffee. So I'm not sure, maybe you want to touch on that as well. I'm sure that's probably quite a common thing.
So look, here's how I don't think there's anybody probably in the market world who doesn't understand that how we feel affects how we perform at some level. Yeah, and that, different habits are either better for us and or worse for us. I think everyone gets that. So what I do with my clients is we hook them up to some monitors, and we actually get their biological data whilst they're trading and actually outside the trading day, normally 3 to 5 days, 24 hours a day. So we can see what's going on in the body. And we use that as a way to get some objective data and to provide some graphical representations that they obviously like and are familiar with, that show them, look, here's what's going on in your body at the physiological level. And as part of that education, I'll share some research which explains from the fact that we have to remember that traders essentially are cognitive athletes. This is the weapon as such. It's all in here. And so we want to make sure that the brain can function as well as it possibly can if we want to optimize performance. But the brain is sitting inside the body. It's about 2% of our body weight. It's about 20 to 25% of our calorific consumption. And it's most energy hungry when we're doing things like decision making, risk taking, planning, strategizing, exercising self-control and willpower, and so on. So if we want all those capabilities to be optimized, we've got to think about the fact it's embodied, it's sitting in the body. So how well I sleep affects how well I make decisions. My aerobic level of fitness and health affects how well my brain functions and how well I make decisions. What I'm eating and drinking affects my glucose levels and energy supply in the body and will impact how well I do what I do. So I think we've got to start with the awareness that we're not just doing it only for health, which is sometimes it's like an add-on. I do my trading and then I try to be healthy. What I encourage in my clients is that we embed all of the health stuff into the process. So it's not I do my trading and then I try and exercise outside of that. It's exercise facilitates good decision making. It's in my process. What I eat and drink pre and during the trading day improves my decision making. It's inside the process. And that mindset shift is really important because this is where we start to think about ourselves as performers and not as a trader who then tries to be healthy, if that makes sense. Yeah, so it's a slightly different framing of the challenge. And then, sleep, exercise, physical activity, obviously very important. How we manage ourselves during the day in terms of rest and recovery. So being aware that, if we're actively engaged in the markets and some traders are very intense, There's a limit to how long we can sustain that before there's a drop off in things like attention, focus, decision-making capability. So being mindful of maybe having a bit of a rhythm during the day where we can unplug a little bit, refresh, recharge. Hydration, obviously important. Caffeine, of course, is a stimulant, so it can be useful. But like all things, it's when does it become unhelpful? And it's knowing when I'm using maybe caffeine as an enhancer or when I'm using it because it's just a habit. It's like checking your phone late at night. Lots of people do that. Sometimes for traders, they need to because of what's going on in the market. So it's intentional. And on other nights, they're doing it just because it's a habit. And it's not actually serving any kind of real useful purpose. So I think that's how we've got to think about these health and lifestyle behaviors, but they do make a difference. And I mean, I've done lots of these assessments with many traders all over the world. And once we start making the changes, they can feel it. They feel the difference. And it's not just about the decision and the trade now. It's also, if you think about P&L per year, if you've got a 10-year career times by whatever X is going to be, that's less money than if you have a 15-year career or a 20-year career. So, and lots of people, they enjoy what they do. They want to be doing it for longer. So we have to look after the vessel that's containing, the cognitive powerhouse as such.
Yeah, that's a really interesting way to look at it. So I guess if we, one thing that you've actually released is a trading journal, which I'm guessing that's because you believe it's a valuable tool for people to have. So,
Yep.
What value can having a trading journal add to someone's performance?
Yeah. So two things I'll say first is once I've got a co-author with the journal. So I have to make sure I give Simon credit because and it's actually his idea in all fairness. So it's, he has coerced me into doing it, but, and I'm glad he did, Simon Cottrell. And so this journal is different to a normal trading journal in that it's not a trade log. It's a journal which is focused on developing your trading performance and your psychology, looking at mindset, mental skills, and behavior, and ideally operates alongside a traditional trade log. It's also only available in written format, so there's no online version because we wanted people to be able to be very deliberate and actually get away from the screens when they were completing it. The benefit of journaling, well, journaling is another interesting one because I think most people know that it's beneficial. And anyone who's kept a journal will know that while they were keeping it, it was probably beneficial. But at some point, for whatever reasons it is, often maybe it's they're kind of gone outside of the beginner phase or results have picked back up again, they stop keeping the journal. But what a journal has multiple purposes for me. One is it's the reflective process. So how do we get better at anything? Not just through practicing, but by reflecting on what we've practiced, and gaining insights into what we did well or not so well, or where we can improve, which then we can take into action, set some, learning goals, act on those learning goals, and then we're into performance improvement. So we're kind of in what we call the learning loop. So it's a way that we can actively stay engaged in that loop over what time frame people, whether it's daily or weekly or monthly, whatever's appropriate for the trading time frame. What you're also doing in the journal as we've designed it is we're allowing people to write down what they're thinking and what they're feeling. And that's the way that we can then start to process thoughts and emotions. We can maybe identify patterns in our thinking and in our feeling, but we also get a chance to kind of download it, to kind of get it from within to outside of us, to see it as thoughts and as emotions, to get some distance. And again, that alone is a really useful process. Then I think it also provides almost like an anchor point. It's like it connects you to your trading process, so it keeps you process focused. But also when times are tough, it's like something you can come back to. It's kind of familiar. It's got a little bit of structure. It can guide you and just support you through those tough times, even though you're also self-reflecting. I think that process can be really powerful in itself from there. So, and I think on top of that, it's one of my clients who keeps a very good journal. He sees it as it's part of the way that I show myself each day that I'm fully committed to being the best trader I can be. That if I decide not to do the journal, it's like I'm making a decision to do something that I know is helpful, and I'm deciding not to do that. And that's a bit of a flag, because what he wants is he kind of has he's got his little map of all the things that really matter that he needs to do to demonstrate that he's fully committed. And the journal is at the core of that. So it's like the anchor point. If I'm doing that each day and each week and each month, it's a reminder that no matter what else is going on around me in the markets, that's outside of my control, but that I'm kind of focused on doing all the things that I can do to give myself the best chance of being successful. I think that alone actually is also very powerful. And then in our particular journal, we've also put in what we call some mastery tasks. So we've got 12 mental training exercises to give people an opportunity to kind of develop some mental skills, some emotional skills as they go through as well. So multiple benefits. And actually, we try to design it for about 10 to 15 minutes per day of input. There's a weekly reflection, probably similar, 10, 15, 20 minutes, and a monthly review, very similar. So we try to keep it low effort, relatively engaging in terms of the content, not too much, not too complicated enough, but that would allow people to be consistent. And I often tell the story about a trader I worked with who told me about one of his colleagues who was a really high performer, who just at the end of every trading day would stay behind. And if he'd made money, he'd ask himself the question, how could I have made more money today? And if he lost money, he'd ask the question, how could I have lost less? So it's one question per day, every day. And it could be as simple as that. So the consistency of one question is better than being inconsistent with 20 questions. And so I think that's the goal. And I have for the last 17 years, tried to encourage people to develop their own journals so they kind of feel some ownership. And then Simon and I really, I guess what we've done is say, look, here's a good framework. And then my hope is that people look at that, use it, but probably go away and create their own version of it in some way, taking out what's good for them and bringing their own insights into it as well.
Yeah, that's fascinating. So I feel like one common theme that we've been hearing throughout the interview is consistency. And, Steve, thank you so much for your time. I guess my last question is that the message you want people to take away from this, or is there another message that you'd like people to take away?
Oh, so many messages I'd love them to take away. But I think consistency is a good one, because I think if we're talking about high performance or elite performance, consistency is probably a big separator. And that means because consistency means that some days you wake up and you might be low in energy, you're tired, but you still got to get out of bed and do what matters. Or you might be having a really good period, you're making above average returns, things are going well, the wind's behind you. It's easy to get overconfident, to get a bit complacent, but you're still going to commit to doing even the most basic of tasks, even though things are going really well. Or sometimes you're the other end of the scale and everything's going against you. You can't, whatever you do, you just can't seem to get a winning trade. It's gone on for a long time, but you keep coming back. You keep sticking to the things that are going to make a difference overall. So I think it's not the magic pill. It's not the thing, but I think it's definitely for all people, it's something to be thinking about. And therefore, the question is, when we think about consistency, is what are the factors that for me in my trading context, I want to be consistent with, such that over time, they give me the best chance of achieving success.
Perfect. And as you said, it's just the best chance, putting yourself in the best position to take advantage of it. So
it's all anybody can do in elite performance. There's no guarantees. That's the hard thing, right? You've got to go full commitment, no guarantee of success. I mean, that's not easy, is it, psychologically? But that's what's required.
Yeah, that's why we're all crazy, I guess. All the high performers, to an extent.
There's certainly some crazy people in the markets, that's for sure. But the other phrase I use often is there are no happy people, because it's one of those activities, a bit like golf, where if you make money, you think, oh, I could have made more. If you lost a bit of money, you think, oh, maybe I could have lost less. So there can always be, in a good trade, I think, a level of dissatisfaction. And actually, I think in high performers also that comes through. You're always finding an area somewhere where maybe you could do something differently. And there's a fine line between using that in a powerful, helpful way and almost making it an unhelpful obsession. But I think that kind of general level of dissatisfaction, or I could do better here, in a healthy way, actually is a really key driver for high performers.
Yep, keep pushing. So, Steve, thank you so much. So,
you're welcome, Anthony.
We've mentioned your journal. We didn't even get around. I know you've written a book as well. I'm not sure if anyone wanted to find more about your work, where would the best places for that be?
Yep. So, you've got the Trader's Mind Journal, which has got its own website, which is tradersmindjournal.com. Then there's 3 books of interest. This is in age order, so oldest first. High Performance Trading, that was 2009. Trader Mind, 2014. And then the most recent one, Bulletproof Trader, that was, I think, 2020. And then for retail traders or independent traders, best website probably is Trade at Your Best. That's where I run like an online course for the retail community. And then if you're institutional based, then it's performanceedgeconsulting.co.uk.
Perfect. I'll put that all in the description below. But
Appreciate
Steve, thanks again.
No, you're very welcome. Thanks, Anthony.
Thank you so much for listening. And if you enjoyed the episode, please subscribe and click the bell icon so you are notified when new podcasts are released. I hope you're leaving with some great value about investing, trading, and finance. See you on the next show.